Hello everyone. Welcome to today's video on exit polls. That is on Monday, 3rd of June. And election day results are going to come on 4th of June. And what would follow after that would be the main focus of today's video. And there has been a lot of hype about the election results, and then the premiums are shooting up. Buyers are clueless what would be the right price for entry. And a lot of indecisiveness is there. If you're holding it for too long, the premiums are eroding. And then as you exit, the premiums are blasting up. And sometimes the call option and the put option both are increasing at the same time. So all these dramas have been happening for last 2 to 3 days now. And it has been happening for more than 2 weeks. But then last 2 3 days, the actions were very intense. And a lot of positions have been changed by the big players owing to the results and the anticipation of how things might play out. So in this video, what we are going to do is to capture all the possibilities, and let's look at the facts and see what is realistic and how you can play it out. First of all, let's start off with the basic analysis of how market has rallied since 7th of December 2023. We have a channel formed in Nifty. So we are looking at day's candle in the charts, and it's been playing well within this band for quite more than 5 months. And as soon as the market reaches a peak of this channel, it gets rejected. Again, it goes up, and then this has been playing out quite well. A couple of times it tried to break out, but then it came back fiercely. So this is what we have been observing. And what are the other things that we should look at? Here I have drawn a Fibonacci retracement levels from the peak to the base of the rally. This is where in the month of October 26th, it is to be precise, from where the market has took a sharp rally upwards. And market has not taken a major corrections. Probably there are some dips here and there, about 500 points, 600 points. But the move from October, if you look at it, it was at 18,000. And we have rallied close to 4,000 points or more. And if I have to include the peak, then 4,500 points of rally, for which the corrections are hardly 500 points or 600 points. That's not big considering the amount of rally that it has happened. And these kind of rallies are also a component of the expectations of election results. Keeping that also into consideration, the market has already rallied for last 5 months. So now what we are going to do is we are going to see what are the retracement levels. If market is have to undergo a positional correction from these levels, the retracement level shows that 38% is around 21,433. And the next level is at 2930, and the next level is at 2426, which means a bare minimum of about 1,000 points of correction to 2,000 points of correction is likely possible positionally. I don't mean that it will happen in the month of June itself. Most likely that the market, how the election results turns out, basis which there will be some sort of moves, but then positionally when it has to correct, it has the possibilities of dropping up to 2,000 points. That's pretty much in line, and it can be expected. And market undergoes larger corrections once in a while, and it's already due very long time that market has undergone any sort of serious correction. So that is one of the possibilities that we should keep in mind. Now, coming to the election results, like what should I do as an option buyer on 3rd of June? Should I be buying call options? Should I be buying put options? A lot of confusion must be there, and it is very obvious. One of the things that you got to remember is what the market has already factored in. Market has already factored. The VIX was somewhere around 11, 6-7 months back, and slowly it raised, and then it reached about 13, then reached 15, 16, and suddenly it is spiking till 24 now. So the VIX is continuously rising. That is one. And also the IV prices have gone up. IV implied volatility has gone up, which led to the triggering of inflated premiums. So 6 months back, if you look at the ATM strikes, they were in Nifty, they were trading around 150 rupees to 200 rupees. Right now, if you look at the option premiums at the money of current week, they are trading somewhere around 400 rupees, 300 rupees. So it's huge. It's absolutely huge. 3x it has grown. So that's something you should keep in mind. So the inflated option premium is point of concern for option buyers. And there are certain psychological numbers that market is attempting to hold upon. For example, in Bank Nifty, 50K is something that the market has not reached. It will most likely use this opportunity of this event to reach that number. Then For Nifty, what is it? 23K. Obviously, it has reached once. Probably 23,500 could be one of the possible attempts made. Not saying that it will reach 24K. That is very unlikely. But what is very likely is that market might try to cross 23,000 and then reach about 23,400, 23,500 levels. That's my take on what eventually would play out in Nifty and Bank Nifty. What are the other things that we should keep in mind? See, the rally has been contributed by many different um, contributors are involved in this. If you look at it, there are company results, there are inflation data, CPI data, and then how strong is our economy growing, the inflation rates, and many other data. Time and again, we hear from finance minister and the big organizations who contribute into this Nifty and Bank Nifty segments have been continuously outperforming, and the results have already contributed to increase in the index values. Now, that is what has led to the rally. So, what drives this rally is data and a sense of euphoria that it's going to be everybody is super excited about the event. So that is another trigger. So whenever there is an excitement and then there are certain emotional rallies that's happening, it is bound to have correction. So considering this channel, I don't see market crossing over this level. Probably on the day of elections or post elections, couple of days, it will reach over here. And what is this level? This is, if I go here, this is 23,420 around that, right? Even if you round it off to 23,400 or 23,500 also, that is all that max it can reach. Above which, if it has to go, what is the reason for it to rally? That's something we should ask ourselves. Why should it rally? So there are a few things that have not been factored in. Let's also look into that. So go down. What are the things that's not factored in? So in Indian market, we have elections going on. That is the big news. But beyond that, there are also other things happening in the global scenario. US elections are there, and then there are also a lot of discussions about what is happening in Hamas and Israel, and many developments are there. What is happening in the Middle East is also going to be a significant factor. Although nothing much has happened in the last 1 year. October 6th was the first attack, but after that there was nothing significant that happened. But having said that, how major developments happen across the globe in geopolitical scenario is going to be a major concern, and we cannot be a standalone market forever. We have to follow the suit, and eventually the global actions are going to impact us, and we are going to follow the suit, no doubt about it. And what are the things that's going to keep this euphoria higher? Let's assess that. Okay, after the election, market comes to some sort of acceptance, and then market has to continue some direction, right? Now, what is that would trigger further upside moves? What are the news that's going to boost it? Right now, if you ask, there is nothing so significant that looks like the next game-changing event in Indian stock market history. It looks very muted. There are no major events or anything that's planned, so that's going to be the absence of any significant news after the election would be one of the reasons why I will be a little bit more skeptical about market further rallying higher. Now, if I have to look at what are the upside and downside prospects, the upside potential, like I said, in this channel, it can reach about 23,400, or maybe if there is some spikes, then it can also reach 23,500. Beyond that, I don't see it going further higher. That's about 1,000 points from where market has closed on Friday. But eventually, if all this euphoria and everything disappears, the results are out, finally it has to make the intended corrections and the course that it has to follow. Then what are the potential? You have about 1,000 points of fall. That is the first level of correction. Second one is at 0.5. That is about 1,500 points. And this is at 2,000 points. So this is huge. This is huge potential on the downside as compared to the upside. So one of the factors that I really see is that lack of news. Then there is the upside looks so exhausted. Why I say exhausted is, look at this. It made a peak of around 22K in the month of January itself. Then it came down. Again, it went up. What is the peak it has made? 22,300. Hardly 300 points of gain. After that, it came down. Again, it rallied up. How much? 200 points additionally it gained. And again, it came down. Where it reached? about 800. So 300 points it has gained. And here you see it has topped out. It didn't make any new high. And it took several months to make a new high. And the new high is also not much. It's about only 300 points higher. So every time the market has to ascend 300 points, it's falling like 600 points down. So that's the kind of, exhaustion we see at the top. And with the election results also done, I don't see any sort of fresh triggers to take the market higher. But the downside is wide open. And the moment some side is wide open, it's likely going to gain the momentum. But at the same time, we should also be worried about the faster erosion on the PE side if you're holding for too long. So many things are happening that we will come to a bit later. And once the news is all out, what will happen to the VIX and IB? That's going to be a major concern. Whenever you see a premium boosting happening in a shorter span, it's like blowing a balloon in the air, and then it will keep on expanding. But beyond a point, if you blow, it is going to burst. Same thing can be said of market. The volatility will sustain only to a level. It will keep, if you keep on blowing the volatility, at some point it's going to crunch and then crash like anything. Suddenly there will be a muted phase where if the market simply stays, even if it is taking a trend, the side will be losing its premium because it has already been bloated so much. So there will be a crunching of premium that's likely to happen. And what is the sustenance? How can the market sustain and then move further higher? Or if it has to make any sort of significant rally from here on, what would ensure the sustainability of that rally? These are the questions that's very much unclear. And these are the factored out. This is not factored in. This is factored out, things to be kept in mind. So do not be so short-sighted to see only up to the point of election day results and then uh, uh, exit poll results, and probably 1 or 2 days that follows there will be some sort of actions to club with the Josh, freshly formed Josh. But after that, what happens is the main question. So in this scenario, what can be done as an option buyer or as an option trader? Let's say here there are 3 scenarios. One, if BJP wins, let's say by a big margin, clearly forming the government without any coalition, then likely it might reach 23,500. Beyond that, I don't see it crossing unless some magic happens. I don't know what sort of magic that would be, but I don't see it crossing 23,500. If Congress wins, then it is again a clear majority. Let's say, then again it's good. There is a stability, but at the same time, that stability comes with the price. Now, everything that the previous government has done, they will be revisiting, and there has been a gap of about 10 years that they were not in power. And to come back and then start things and then create certain policies to act upon it is going to consume some time, about a year or so, for it to get hold of how to play about and bring in some people-friendly policy, bring in some sort of changes that's helping the common man. Again, to find that fresh triggers to go up would require some strategic thinking, and it would take time. So again, in that scenario, since there is a lot of decision making and then the phase of planning would be going on, again, I don't see that can be a trigger for going up. Probably market would consolidate or come down. So scenario 2 is that if BJP, scenario 1 is BJP wins, I see that it is going up and then going to come down. Congress win, probably there could be some initial spikes on the results day or probably down, whatever it is. But after 2-3 days, it should go down. Now it's a hung government, which means instability. Nobody is able to decide who should be in power. And somehow, the government is formed, either BJP forms or Congress forms. Doesn't matter. It only shows that there is some sort of indecisiveness in who should be running the government. So that is the basic funda behind hung government, which is also not a good thing because it's not wholeheartedly accepted government. It's only a coalition government. So again, there will be some sort of lackluster performance in the market, and it should definitely be taking markets down. So market should go down. And in all these scenarios, what I am saying is that there is a potential of market going slightly higher or consolidating and then taking a nosedive. That's what I am looking at. And in all these scenarios, what we should not be doing is to go aggressively on the put side, because even if the market stays for a day or so, the premiums are getting butchered. And then the moment that you exit, it's suddenly, spiking down. So here, what is most important is to wait for the right time to enter in And then don't dump all your money just, going super aggressive on this result days. You will be disappointed because the premiums are already super high. The premiums are already 3x more than what it should be. So even if your view is right, if you're on the put side, if you're on the call side, market is going in the direction, there will be hardly a brief moment of profitability, but most often that you will be seeing losses in your profile. The reason being the premiums are already super inflated. Writers will try to attack and take control over the market. Now, so in that case, what should be done? You wait for things to settle down, and then look for opportunities where after say 1 week, say June 10th or so, once all this things are settled, you will see that the premiums crushing, and that's called clutching. It will be crunched and then it will come down pretty faster. Use that opportunity and then see what would be the right levels to enter. And what I feel is that this is where the market has taken multiple supports, that is 21,800. If this level is taken out, it's going to be a massive downside correction. No doubts about that. There are triple bottoms formed here. If you see March 20th, then April 20th, and now May 10th or 13th, whatever. So in about exactly 1 month interval, it has made a triple bottom in day's candle. And if that is taken out, then we are in for a massive correction, even to the levels of 19,700, which is 78% of correction. But let's keep that. That is far-fetched. But right now, what is a very reasonable correction that you can anticipate is 21,430, 2930, and 2426. So how should this be played out? Let the market, you just because everybody is crazy about election day results and other things doesn't mean that you should also be jumping in aggressively and then blow it out, because it's 3 times inflated. And if too many ants are trying to play it, it is going to burst and the premiums are going to get crushed. You just wait for about June 10th to happen so that everything normalizes. When everything normalizes, you know whether the market has made a fresh high, or is there any fresh triggers, or is it clearly going down. That clarity you gain. Missing out a market for 10 days is not going to hurt anyone. Just drop it because it's worth it. If you skip this 10 days, you have clarity. If you jump in right now, you don't have any clarity, and eventually you will be missing out your hard-earned money into a wrong trade, right? So wait for 10th, and after the premiums are getting crushed, let's say, and you say that you know that market is likely to go down from here on, then play positionally. Go for month-end contracts, accumulated small quantities, and then try to exit at defined levels. You do some sort of intraday study that you wanted to do and then exit, or you want to play positionally. Positionally means say that it has broken 800, then obviously the target is 21,400. So I will be waiting if I'm taking 100 quantities over here, probably 50 I will be exiting here. Other 50 I will wait for it to capture here. Likewise, you can play positionally, which is much more safer, because in IVIX environment and I implied volatility going on, it's not really advisable to play on intraday basis. You will be losing money. And that's the analysis. And if you guys have any questions, please feel free to post your comments and feedback. I will answer them all. Hope this video was helpful. Thanks a lot for watching. See you next time.